shift focus then to Prime Focus then. The company has reported the Q1 numbers and the company continues to report a loss, though there has been a marginal uptick there, though the loss still stands at 17 crore rupees versus 22 crore rupees. Let's connect with the management and garner more details about the same. Vikas Rathee, who is the CFO of the company, now joins us. Mr. Rathee, great to have you with us. First up, I would like to know that you continue to report losses despite an improvement in EBITDA. Is that due to an exceptional cost entirely?
Yeah, Kamya, thank you very much for having me today. I think there are a couple of components. I think as we absorbed a couple of companies in the last 12 odd months, I think the size has increased dramatically. I think we've now for the first half reported revenues close to 1,000 crores, which prior to these transactions is more than what we were reporting on a year, from a full year perspective. The couple of things. One, I think our depreciation, non-cash depreciation amounts obviously have increased. They've gone up to about 60 plus crores. There is some exceptionals coming through, which is in relation to integration costs that we have in relation to these transactions. They have reduced dramatically in this quarter, as you probably would have noticed. I think they'll taper off over the next couple of quarters, and I think that will allow us to be able to generate PAT on a console basis. On a standalone perspective, we are a PAT positive company.
Okay, and your margins have not sustained. When do you return to 25% plus margins?
See, I think what we've guided is, for FY16, we expect to be in the 20% odd EBITDA range, if not higher. For the first half, we are actually almost at 19% now, with EBITDA of about 185 crores for the first half. I would say June and September quarter, if you look from fiscal 16 perspective. So I think we're already trending pretty close to where we target for the year end. December and especially March quarters are a lot stronger. So I think we're still very confident that we'll be in 20% or north of that for the EBITDA margin perspective for FY16.
Okay, and Mr. Rathee, let's talk about your debt, which currently stands at around 1,000 crore rupees. What are the plans to reduce debt?
See, there are a couple of things, Kamya. I think one, as we go through it, they're fairly sizable merger transactions, allowing us to get to a very, we're becoming a global player, and I think one of the global leaders, not just for India, but I think for the Hollywood industry. So I think that does come along with the pain of having to raise capital. I think what we've done is we've managed these transactions primarily with equity. Some debt has come along, which is primarily in terms of what the debt these companies had. Despite more than doubling our revenues, our debt load hasn't gone up dramatically. So we're about 1,100 odd crores. The reduction will come from two fundamental initiatives. I think one from an operating cash as that comes through, we will use that towards debt retirement. We continue to retire higher cost debt. Almost 75-80% of our revenues come from overseas, although overseas debt is still around 50% of our debt load, which as you can imagine, overseas debt costs are much lower. So the aim during the course of this year is to enhance the composition of overseas debt versus domestic debt. That will reduce finance charges and interest costs towards that, and subsequently through operating cash and potential other transactions reduce our debt load over the next 12 months.
Okay, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective, Vikas. All the best for the quarters ahead.
Thank you very much.
That's a perspective from Prime Focus on their numbers. Speaking of numbers, what's going to come today are some of the oil marketing companies, and Ajay Sharma joins us with